The next session that we're going to start is the panel discussion 3. The third session for today, unlocking new investment avenues, fintech, green finance and infrastructure. This one is going to be a very interesting session. I request all our guests to kindly be seated. Please, everyone, come on, take your seats. Deliberate on the key opportunities and challenges in various asset classes for expanding the capital market, including opportunities in equity, bond market, mutual funds from shareholder to stakeholder, listing of startups, IPOs, rising role of women investors, challenging profile of investor segment in Indian markets, enhanced role of corporate bond markets, India's reforms and investment opportunities, innovative financial instruments in the securities market. Ladies and gentlemen, let us get started with the panel discussion number 3. We'd like to welcome our moderator for the session, Mr. Ankur Mishra, Deputy News Editor, ET Now. Let's have a round of applause. Thank you for joining us, sir. We have eminent panelists on the panel, starting with Dr. Rachna Baid, Professor and Dean, National Institute of Security Markets. Round of applause. Ladies and gentlemen, come on, let's welcome them. Next up, we have Mr. Jyoti Prakash Gadia, Managing Director, Research in India Limited. Thank you, sir, for joining us for yet another panel discussion. Next up, we have Mr. Chirag Mehta, Chief Investment Officer, Quantum Asset Management Co. Private Limited. Let's welcome him with a round of applause. Second last on the panel is Dr. M. Narendra, former Chairman and Managing Director, Indian Overseas Bank. Round of applause, ladies and gentlemen. Last but not the least on the panel, we have Mr. Samir Shah, Head Online Business, Axis Securities Limited. Round of applause, ladies and gentlemen. And I request our moderator, Mr. Ankur Mishra, to please get started with the session. Thank you.
Thank you so much. Welcome, ladies and gentlemen, to yet another topic, which is something new. When we say something new, meaning the learnings which has been in the past and what we can look forward in future. So first, I would like to start with you, Chirag. When we talk about new investment avenues, you have been someone which is associated with the investors who are actually garnering attention with the kind of work you would have done. So tell us, what are the new things you are doing? And particularly when you talk about new investment avenues, how it can improve or help in capital market?
Yeah, hi. So there are a lot of things going on, right? We are seeing participation increase significantly in India. There are investors asking for newer and newer options. We talk about big numbers on equity markets, but we are barely getting started there. I think there is a big runway there. So we have to get these investors into investing with the products that they want to. So one very important product that has a great tailwind from the government, from the global world, is something called sustainable investments, or ESG. So I think we were one of the early starters into this space. We launched the fund in 2019. And there is a saying that if you do well, you have to give away returns or sacrifice returns. But that's not true. What we have demonstrated with doing well in terms of caring for the environment, caring for the society, having good governance, and still it has done really well from a return perspective. So there is huge requirement for climate finance in India. We need about $10 trillion by 2030. So there is a big ask there. So it has to be met by two accounts. One is foreign investors coming into this fold, and second is domestic investors also moving in. Government is kind of very supportive on this front, and therefore for investor perspective, there is a big tailwind that is supportive of that. So foreign money, given that it's going to be flowing into Indian markets in this space, this is the only thing where domestic investors can take the lead and be ahead of the curve before foreign investors start participating in a meaningful way. So I think sustainable investments, ESG investments, climate investments are one of the things, but there are of course impediments to that. Like for example, if you want to do green financing, there is no definition of green today. So we don't have something called as a green taxonomy in place. So unless we have or address those challenges, I don't think there is going to be a meaningful capital flowing into that part. So I think there is some work done, but I think more needs to be done to enable that. Plus, there are many new offerings that can be enrolled apart from climate finance into the mutual fund fold, like the 401k movement that we saw in the US markets. I think it's time that India kind of starts on that path. There is a lot more capital that can come into Indian markets from that perspective. Today, we have NPS version of it, but if we give investors an open spectrum in terms of the choices that they can make for their retirement savings, then I think there is a big scope for doing that. Also, from tax perspective, there are certain things that we are kind of benefiting foreign investors. For example, an NRI coming into investing in GIFT City and that fund investing into mutual funds in India, there is no tax that they'll pay. But if you have a mutual fund and a domestic investor investing in that mutual fund, they have to pay capital gains tax. So we need to see that we give the right amount of incentives for investors in India so that we can channelize a lot of savings into equity markets. Equity markets investing is about 5-6% of the total savings that people have. Still 65% is locked in fixed deposits and gold. If we have to channelize, we have to give the right set of products, right set of incentives for them to participate in the capital formation that we're looking for.
Right. Now, to elaborate more on this, let's get a banker's view first, because you spoke about green financing. Now, this is something which we understand that bankers do not have any incentive of doing that. Some of them have started on their own. How do you think that can propel without any support? And do you think that individually, few banks trying it out, will it work?
Yeah, thank you for that question. One is, even Anant Narayan mentioned, there is a very large opportunity for sustainable finance or the green finance, and my earlier Chirag gave some statistics also, because India is committed to net zero emission by 2070, and by around 45-50% of the target, actually we are much ahead, we have to achieve by 2045. So the first move has been taken also by the government. They have issued around 39,000 crores of sovereign green bonds. And the private sector also has taken around maybe 20 billion rupees of such bonds, and private particularly for alternative energy projects. Now, as he rightly said, the Reserve Bank of India has issued a circular that the banks have to first see what are the climate risks available in their portfolio, and while they finance future project also, they have to take such of the corporate by seeing their reporting and all, are they capturing all the such, what are the emission mitigation efforts they have done, or if they are again doing the carbon emission, then that will have to be disincentivized by the bank. But in terms of their pricing and additional capital or risk weights, these guidelines from the Reserve Bank only they asked to study, but that they are yet to come. But on the other side, the Reserve Bank has issued guideline for green deposit. So that green deposit, in a way, they have to raise from the all of us that you will specifically give that deposit towards financing green projects or alternative energy projects, or the Reserve Bank has clearly brought what are those areas you have to have, and that portfolio will have to be kept separately in terms of the overall outstanding or separate head of account. So the depositors who have given green deposit will be sure that that has gone into the green assets. But as a responsible Indian or a citizen, we will be now futuristically promoting what you call environment related projects, because we are definitely being affected by the climate every day in terms of the whatever human losses and other physical losses, financial losses. So in that respect, the green deposit giving is good. But from the bank's point of view, as you mentioned, that there should be some more incentivization by the regulator so that they can give better return to the depositors. One is, as a responsible, I am willing to give deposit, green deposit, even at a lower rate than the normal rate, because it is ultimately going for the betterment of the society. In another way, okay, to promote that green deposit, if CRR is exempted from the green deposit, the banks also will get encouragement to go aggressively and get the green deposit. Otherwise also, the bank also will be now raising green bonds other than the sovereign bond or the private sector raising, because they need to see that they don't unnecessarily get into such company who are emission remitters. So the mitigation effort has to be done. But
Right.
one area, as you rightly said, that can be some more incentivized.
So incentivization is the key if you want to propel new areas of investment. I would like to come to you, Mr. Gadia. In the budget also, there was an increase in capex which was announced by the government, so the intent is clear. But if this kind of infrastructure work has to go through, do you think that new investment avenues will come into play, and particularly this green financing, if you are raising green bonds, that has increased a bit, but where it is lagging still you feel?
Apart from talking, I don't think anything much has been done in terms of green financing and in terms of green bonds. Like suppose if I give you an example that HDFC or for any other bank, they are coming up with a fixed deposit where they are offering you 7% return. If I am saying, sir, I am now offering you a green bond where I will invest in the green energy project, you please, I am offering you 6%. Vis-a-vis, I am against the fixed deposit, I am offering you 7%. How many investors are there in this room who are offering their fixed deposit money at 6% just because I am taking the money and I am investing into the green, sir? So it means, sir, whatever that we are talking about, sir, in case if my cost
It's more of a
fund,
posturing you are saying rather than in reality.
not posturing, sir. I am just trying to say, sir, in case if my cost of fund is similar, whether it is carbon neutral, whether it is hydro, whether it is any other cost of fund, whether whatever green or non-green, my cost of fund remains the same. Only difference that I can tell it to you as a fundraiser, sir, I have got more investor whom I can approach in case if I am doing a solar project, vis-a-vis I am doing a coal-based project, I have got more investors whom I can approach. I have better chances of raising money because for that 100 crore rupees, I have got 5 different investors whom I can approach. If I am doing a coal-based plant, I have only 2 investors to approach. This is one thing. Now, I will just give you one example regarding the power sector itself. There are 3 companies under the power ministry. One is REC, PFC and IREDA. All the 3 power companies, they are only financing the power companies. REC and PFC, they also finance green project. And IREDA is only financing the green projects only. I will just give you the market impact of that. REC and PFC, their P is into the range of 7 to 8. Whereas IREDA, the P is around 59 rupees. It is around 59. So what is impactful? It is not on the debt side that it is getting impacted. It is on the equity side of the green financing, that where lot of equity players are coming and putting in equity. But those equity returns are being made through the listing and through the other market gains. Right. All the debt side returns are not there into the green financing or into the infrastructure space. The equity side returns are there, which basically balances the things out. Sorry, Narendra.
Yeah. Only in green financing, आपने बताया, but there are going to be a few corporate, few individuals, few trust or longer pension fund. All of them will be also looking at some green deposit, because it is in the overall world over that this ESG compliance and this type of climate,
Sir,
that is
देने
required.
वाले बहुत हैं.
Return का भी एक बात है, but return का over and above that, this particular point is there. But the responsible organization, suppose bank, we have taken deposit, we have to give it to such green project only, because there is another word called green washing. Corporate would have raised funds in the name of green bonds, and they would have not invested in the green project. So that's where there is a necessity of monitoring agency. The monitoring agency will ensure that these green deposit or green bonds will be invested in the only such green asset, because over and above that, if the corporates are doing any exports, then if they are not compliant with the green aspect, their product will have an additional what you call a tax. Now the Europe has already 12%. So this particular thing, no, आगे आगे आने वाला है. हम और आप सब, we have to support green deposit and green bonds so that we will have a more, because only government alone cannot do this type of
It has to
alternative
come
projects.
from all the sides. Definitely point taken. Rachna ji, I would want to come to you now for this. SEBI had come out a few of the nudges. In fact, the Reserve Bank of India, as he mentioned, had came out circular on green financing. But do you think just a regulatory nudge will do the trick? As he was mentioning, there should be more participation from the companies itself. How can that happen?
See, we all have to accept that that's going to be the reality in future. We are going through a transitionary phase where all these challenges, they are the real challenges. But sooner or later, every participant in the ecosystem has to accept that sustainable finance is going to be the need of the hour. One can no longer focus only on profit, but has to think of the purpose as well as the planet behind it. So these nudges which have been provided by the regulator are the, trying to give those initial incentives, giving the guiding force in the roadmap for a long journey, which is we all have to take together.
So when you talk about new investment avenues, you cannot exclude fintechs from that. And for that, we have our guest, Mr. Samir Shah. You had an important vertical in the organization where you would have seen that recently there has been news about once again malfunctioning of the terminal, technical glitches, although regulator has done their job by coming out with the guidelines in 2021-22 for both exchanges as well as brokers. But often we see that investor complains that my money is lost. How will a company recover? So what are companies doing for that?
First of all, good afternoon. Say, if we talk about technology, the major role of technology is to simplify our life. And considering extent, it has succeeded. But when we talk about technology, it has a flip side, like it comes with the challenges. And the challenges we talk about is glitches. So glitches will be part of even tech giant, I would not name it, but you have faced, they are also facing the challenges of glitches. Now, when we talk about glitches, generally what we have seen is there are three types of glitches which is continuously occurring in the system. First is unprecedented volume on particular day, if more than expected volumes comes in, then we have seen the system failure. Second major is sometimes infra, the tech infra might say continuously companies are upgrading their infra, IT infra, but sometimes we have seen the infra got failed. And the third and last one is malfunctioning of software, because these are the software when we write the coding and all. That point in time the situation was different, and when some different situation comes, right, software might function differently. So these are the major glitches which is happening in the technology side. But the important point here is not the glitches, how fast company can cope up with the issue when it arises. So nowadays, what we have seen is if we talk about exchanges or brokers, right, or any institution, those who are serving the retail side, they are working on the extension phase, right, where they have created an alternate system. So when the main system get failed, they are trying, they move simply from main system to alternate system. But sometimes what we have seen, like, no, these are the two things. Apart from that, they have created a DR system also. But generally, this two works. Like, no, from main system to, they can easily shift to alternate system. What particularly we see is, like, no, on the exchange side to regulate, like, no, regulatory system have created a daily reporting system, daily, monthly, weekly, fortnightly. They have to, member has to report to the exchange, like, no, if whatever, if a failure is there for 5 minutes, still they have to report to exchange. And if like, no, if any member has faced system, like, no, system failure for more than 15 minutes,
there is
5
a
times in
regulatory
the
guideline,
year, then there are penalties, like, no, they cannot even open, like, no, SEBI can barred from opening further accounts. So such kind of, like, no, regulators are also aware, and they are also taking proactive measures. So somewhere, like, no, we are largely there, like, no, but as I said, no system is perfect, the glitches would be there.
But the regulators are also sometimes come for seeing your systems and what is the updation or technology investment you have done to upgrade that, as well as to make it on a stress scenario or the higher volume, also see that the robustness of that. I think
Yes.
such things should be done so that we'll avoid such glitches.
Yeah. So if we talk about regulator or regulator sides, they regularly visit and check the functions of the, like, no, how systems are functioning. But the way I said, like, no, sometimes, like, no, unprecedented volume can happen, and
That's why the business continuity.
yeah, that is there.
So, of course, the regulatory side is there, as I was saying, but a more pertinent question is whether or not investors who lose money in between, they should get their money back or not. Chirag, I would want your view on that.
No, of course, investors' money is is paramount. They should get their money back. It's their hard-earned money. They should get it back. And coming to even from a returns perspective, I don't think we were talking about green deposits and other things where we are talking about investors to be getting a lower rate of return. Why should an investor get a lower rate of return for any investments? Narrative fails completely there when you're asking for a lower rate of return for an investment that they have not been into, which is newer in nature. We have all seen solar prices drop from where they were and where they are today. It's about 1/3, 1/4 of where they were when we started. So one is to get into unknown territory, and second is to either lose money or get a lower return. I think that's not acceptable for investors. If investors have to invest, you need to compete, get viable products that give you at least the same rate of return or a higher rate of return, and that is what we try when we give products from a mutual fund perspective. We try to innovate products in such a way that investors get commensurate return for the risk that they are taking, and otherwise it's not going to be a viable product any longer.
There's no two-way about it. For our ads also, if you would have seen, kitna deti hai, wo chalta hai. So, I would want to come to you, Rachna, for this. On one side, it is a fair ask of investors to ask for money which they have lost due to technical glitches. But on the other side, it is very difficult to quantify that. So how should regulator go about it? Because often when we have asked these questions, we have got the answer that an investor is aware before investing about the risks which it is happening.
For regulator, investors' interest is paramount. And that is why a lot of regulatory steps, actions have been taken place. In fact, in the previous panel discussion also, it was being discussed the number of circulars which SEBI has come about in the recent past. The main objective of all those regulatory developments is to protect the interest of the investors. The second thing is with regard to the financial education and literacy. Mr. Anant Narayan was also mentioning about the quality of financial education. Today, Ankur, as we are talking, or you were discussing the episode of Paytm. Of course, that episode, each one of us are familiar with and have a take on that episode. However, one small thing which is noteworthy is that if I just search on YouTube with regard to should I be investing into Paytm right now, there would be n number of influencers who are doling out the advices. And there are thousands of investors who are buying those advices and investing into it, or rather I would say speculating into it. There are thousands of investors who are executing those trades based on the rumors which are circulating into the market. To all such investing community who I would not actually call them investor, I would call them traders or speculators. If they are doing that on the, see, many of them are actually thrill-seeking traders who are taking those positions for the adrenaline rush. A simple solution for them is to kind of get involved in playing some sport or a board game for the purpose of thrill seeking rather than participating in the capital market. So, the regulator has been doing its job, and going forward you would be seeing more initiatives from the side of regulator to be educating and empowering the investing community. Investors also have to take an onus of it and do their bit, So earlier time, we used to hear this advice which is still valid today, कि जो चीज़ समझ में नहीं आती है उसमें आप invest नहीं करिए. Or at least if you are not able to understand, go to a credible source who would be in position to explain the risk, return and liquidity profile of those investments before making the choices. That, learning is, in today's time can be very very comfortably employed, because there is the investment landscape has evolved hugely. Plethora of choices are available for investors to, pick out products which will meet their risk, return, liquidity profiles. So if they also start doing, many of them are doing it, but it's a collaborative journey. Everybody has to play their role into it.
So you mentioned about Paytm, I did not, but if you have mentioned, right. But in any case, when this kind of incident happened, and I'm not talking about particular company, but as a process, somebody who has invested at very high price in IPO, many investors are asking questions now. Now, to take lessons from companies like this, where investors have lost money, but what we are discussing today is how investors can be attracted to capital market, how that can grow. Now, for that a venue to be created, I want Mr. Gadia, you to come in. You think that traditional ways will work, or you think that there should be new way of doing same things?
I think so. It's going on fine in terms of attracting the retail investors into the capital market. It's whatever the market is doing, because India के अंदर भेड़ चाल है, तो if anybody makes money, then everybody starts making money there. So I think so that way people will find out ways and means till the time that they start seeing that there is a money to be made. So I don't think there's nothing to be done on the equity side of it, but something important to be done onto the attracting retail investors to the bond market or to the debt side of the instrument. That's where I think so a lot of work need to be done. There the process is very complicated. Here all the minimum ticket size is very, very huge. There is no market maker concept. There is, and I can tell you, being a category 1 merchant banker myself and doing a financial work, for me to buy a bond also, it takes me 3 days of planning even to buy a bond myself. And to do a primary bond issuance where I need to participate, sir, so where the minimum requirement is such a huge amount that I don't think that any in the primary issuance also that any of the retail investor can go and purchase. There I think so, all the regulator at the present moment seems to be that I am the regulator of the equity market. I think so there has to be a different regulator maybe for the debt market or for the bond market. That's where the differentiation in terms of debt market need to be bought in. Equity market, everything is going on fine for the time being.
So more work needs to be done for debt market and particularly bonds platform. We have seen the threshold being reduced recently. But do you think that for retail participation particularly, the entry point is the one thing which needs to be solved?
For the retail participation into the bond market, into the debt side, to get an entry where I can purchase, suppose if I decide that I want to enter into it and I have to comply with the KYCs and everything, sir, it will take me 5 days of time. Just to purchase my first bond, and in case if I am so serious कि मुझे खरीदना ही खरीदना है, sir, you will get at least thrice the frustration that I am not going to buy that. Sir, the platform itself, sir, there is no competition in terms of because if you want to do an equity trading, sir, there are at least plethora of investment which will come, there will be plethora of the platform which will come up, which will encourage you, which will come to your house, which will do all these services offering and everything. Whether if you want to purchase a bond, whether that type of competition is not existing itself onto the intermediary sides also, sir.
Definitely. I would request audience also if you have any question, because we have paucity of time, so I would want to include you as well. Yeah. Please give mic, please.
So as you rightly said, there is one study that we need around 2.5 trillion US dollars of what you call green bonds. That is around 162.50 lakh crores till 2030. And for the national determined contribution, NDC के बोलते हैं, that government has given. And for the up to 2070, for net zero emissions, we need 716 lakh crore. That means US dollar 10.1 trillion. That type of investments are all needed for the what you call reducing our dependence on fossil energy and going towards the other alternate energy, as well as taking some mitigation and adaptation plan and all that. So in that respect, as earlier I mentioned, 39,000 crores of government sovereign bond. Government introduced the green bond framework in their overall schemes, and through budgeted allocation, Reserve Bank has been issuing, and around 7.25, 7.18 or some return has been given. This year also they are issuing around 20,000 crores. After that 5,000 they would have issued after the budget now. So that is from the private government sector. Now private sector around 22 billion rupees or that has been raised, and particularly like our Adani and some of the other major green energy companies, they have gone in and they have raised the green bond. But that will have to be now more. Public raising means public investment and private investment together should be done to achieve that target, and for which private, because the another thing आपको मालूम है, even infrastructure में along with this also 111 lakh crores on the what you call NIP plan में रखा है, for which again government has to have the around 39% private sector participation.
एक second, sir, let me answer it, sir. Let me answer it, sir. P multiple of all the green companies, sir, it has tripled in last 2 years as compared to all the comparable with all the उसका जो भी competitor है in terms of which is a non-green. In case if you are running 100 rupees, if it is a coal-based power plant, 100 rupees from the solar power plant, your P multiple is 3 times into the green multiple than which is there. So that is where the ESG people are making money. It is not on the debt side where the ESG people are making money. It is on the equity side where the ESG people are making money, sir.
Equity will be more, actually. Equity side, their valuation
Not to
will
forget
definitely have more.
IRIDA IPO, which recently came.
Sir, IRR in terms of all the power companies, sir, if you compare with the solar power plant, sir, where the per megawatt or the per unit costing is around 3.25, if you based with a coal-based power plant, it is also the same right now, sir. It is at what price you are selling, because the customer are bound to take 10% or 15% into the green. तो उनको सर 7 रुपए में पर यूनिट खरीदनी पड़ रही है ग्रीन, whereas for a coal based power plant they are purchasing at 6 rupees. Input cost for the solar and input cost for the coal based power plant is the same, but the customer, since he has to purchase 10 or 11%, 10 to 15%, which is the customary requirement, when that will be met, government is going to increase that much of an amount. Abhi there is a demand supply gap. That is why the customers are forced to pay at least around 10 to 15% premium for buying the green energy.
Right. Thank you so much. I think rest of the questions, we are running short of time, so I request you to take it personally. We have a lunch break, ladies and gentlemen. I'm sure we're all very hungry. Let's do the lunch break in 30 minutes. But before you go, can we have a round of applause for our panelists, please, ladies and gentlemen? I request all of you all to please pose for a picture. Ladies and gentlemen, please be back in 30 minutes. 2:30. Try and be back in 30 minutes so that we can start the next session on time.